Hello, everyone. My name is Daniela Cantera, and welcome to another episode of Income Investors. With me today is Mo Zulfiqar with another exciting income pick. If you would like to read any more about what Mo writes on a regular basis, head to incomeinvestors.com, or you can click the link to our website in the description below. Over the past decade, the financial world has been turned upside down. Cryptocurrency were introduced and promised to disrupt how we send and store money. Fintech startups popped up everywhere, offering easy-to-use apps and instant money transfers. With this, the traditional players that were deemed slow, expensive, and built for a different time period, and we were told they would fade away. But sometimes the story doesn't play out the way everyone expects. Western Union Co. traded on New York Stock Exchange under symbol WU, a name many think of outdated way of money transfers and physical retail locations, is proving it's not ready to be replaced just yet. Behind the scenes, the company has been undergoing a major transformation, such as cutting costs, streamlining operations, and aggressively expanding its digital footprint. While investors remain skeptical, with WU stock with close to 11% dividend yield, rock bottom valuations, and stable financials, it stands to look like a deep value income play. Patient investors could be rewarded here immensely. Mo?
Thanks, Daniela. Headquartered in Denver, Colorado, Western Union offers money movement and money payment services globally. The company operates through two business segments, and they're consumer money transfer and consumer services. The consumer services segment of the company offers services such as bill payments, money orders, retail foreign exchange, prepaid cards, lending, partnerships, digital wallets, and a media network.
WU stock pays robust 11% dividend yield.
One of the most attractive feature of WU stock is the dividend. Despite all the noise about disruption and competition, Western Union continues to reward cash to shareholders quarter after quarter like clockwork. The dividend isn't just generous, it has been consistent even as the company steers in this quickly changing business environment. Currently, WU stock pays 23.5 cents per quarter on an annual basis. This amounts to 94 cents per share, and at the current price, this equates to a dividend yield of 10.8%. Now, anytime when a company's dividend yield surpasses 10%, it's important income investors ask if the yield is safe. Sometimes there are dividend traps out there, and these are the stocks where dividend yield looks great, but the fundamentals are tormented. At the moment, given the current financials and what's ahead, dividends at WU stock seem safe. For some perspective, Wall Street analysts are projecting the company to report earnings per share of $1.78 in 2025, and the profitability is expected to improve to $1.85 per share in 2026. So if you do simple math, the current dividend is roughly 52.8% of 2025 earnings and 50.8% of 2026 earnings. And it may sound an out of the world idea at the moment, but since these payouts are so low, Western Union actually has some room to grow its dividend as well. And it would still have some money left. If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. Now back to the video.
How are the valuations for WU stock?
I think valuations are really worth watching here. WU stock is trading at levels you don't often see a stable company trading for in today's market. The WU stock is currently trading at 4.86 times its forward earnings. That's really cheap. If I were to compare it to some bloated fintech and financial stock, they get much higher valuation. Even relative to the broader market, say the S&P 500, W stock is severely undervalued. As it stands, S&P 500 is trading 22.2 times its forward earnings. And I repeat don't forget this. This is a company that's still making money. Right now, the market is pricing WU stock like it's a dying business. It's far from it. But if the company manages to stabilize and keep growing its digital footprint, the narrative could flip, but when it does, the stock could see a big move up.
Thanks, Mo, for your insights. Western Union is one of the oldest names in the money transfer business. The company operates in over 200 countries and moves billions of dollars across borders. Certainly, in the recent years, it has struggled with declining revenue and fierce competition from fintech and crypto companies. However, it can't be stressed enough. WU stock is down, but not out. The company is actively cutting costs and streamlining operations. On the financial front, Western Union remains profitable and continues to generate solid free cash flow. Its balance sheet isn't perfect, but it's far from distressed. Best part for income investors. The stock trades at rock bottom valuation multiples and pays a dividend that yields close to 11%. This sort of opportunity is hard to find in this market where S&P 500 has a dividend yield of a little above 1.20%. Also note that there's a lot of institutional support with WU stock as well. As per the most recent data, 619 institutional investors hold a little over 99% of all outstanding shares. BlackRock, Vanguard Group, and Price T. Rowe Associates Inc. are the biggest shareholders. Combined, these three shareholders own close to 101 million shares of WU stock. That's it for today, and make sure to go to incomeinvestors.com to get our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can also find the link to our website in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.